It's all about the numbers in China in the week ahead, with a flurry of data culminating in third-quarter economic growth figures on Friday. Analysts are expecting a tick up in China's growth in the June through September period, keeping within range of the government's 7.5% growth target for the year. A recent run of positive data shows a reversal of fortunes from the start of 2013, when sentiment was sagging. Back then, China's manufacturing sector was suffering from a slump on weak orders from overseas. Now things are looking brighter, with industrial production and purchasing manager surveys picking up steam. Jonathan Garner of Morgan Stanley.
We've consistently been overweight MSCI China, in fact, since the tail end of the crisis at the end of 2008. And yet it is true that amongst dedicated long-only managers, China is the structural underweight, whereas markets in ASEAN and South Asia are overweights. And I do think when we look at that, we've seen an enormous reversal in performance relative in the last couple of years.
China's economic data will provide a lead into earnings season, which kicks off toward the end of the month. Consumer companies will be among the ones to watch to see if a recovery in manufacturing is translating into bigger spending. U.S. fast food giant Yum! Brands on Thursday spooked some investors after it reported slowing China growth. Some analysts took that as confirmation that middle-income diners are cutting back due to austerity measures. But e-commerce companies such as Tencent have been soaring as China goes on an online buying spree. Tencent has been the top performer on Hong Kong's Hang Seng Index this year, with revenues tracking continuously higher. If China's economy continues to show signs of light, it could end the year looking brighter than many of its counterparts, especially if the country's consumers part with more of their cash, shoring up government hopes to transform China from export to consumption-driven economy.